How we doing, Benzinga Nation? We're here with Adam Johnson in New York City Central Park. Why Central Park, you might be asking? Well, look around. You guys can see the action that's going on. We are fully reopened. A lot of people focusing on the economy. Is it getting weak? We see a lot of action, at
City's
least
back.
here on the street.
Yeah,
New
it
York
feels
City.
good, doesn't it?
It does.
I mean, it's
feel
been
good.
so long. We waited for this for 2 years. And I can tell you, I walk down through the park every day. And, Mitch, there were so many days where there was just nothing happening here. And to see it like this, it's exciting.
Yes, one thing that the reason why I first reached out to you was a lot of these walks in the talks, walk in the park, talking about the markets.
Yeah, right,
and
walk and talk.
I love those that you do that because what it shows to us is the real life kind of walk. You know, there's always studio talk, but I think it's always great when we can get true opinions and transparency. That's why I've always reached out to you, Adam. So
thanks,
I'm excited to jump into today's interview. Let's talk about first, how do you find quality stocks? You know, you have Bullseye Briefs.
Sure.
And a lot of that is a newsletter.
Yeah.
So how do you find the high quality stocks?
Well, my thing at Bullseye Brief is American Ingenuity, right? The people and companies driving the world forward. So I'm a growth investor. I'm a thematic investor. If American Ingenuity is the theme on the top, then it's the themes on the way down that bring me to individual stocks, whether you want to talk about artificial intelligence or robotics or clean energy. And then it gets into the nitty-gritty of what you're talking about. How do you find quality? I think there are a couple things that define quality, especially right now. One, given that rates are going up, is low debt. You want to see low leverage. Number two, given what we have been through over the past year and a half because of rising rates, companies with cash flow, with real earnings, that matters. All of a sudden, just having revenues, it's not good enough. And then I think the third component that I would imagine everyone can agree on, and this is going to sound very Warren Buffett of me, but you might want to sound like Warren Buffett, and you might want to be like Warren Buffett. Focus on management, quality management teams. So if you can find cash flow, if you can find low debt, and if you can find quality management teams all wrapped into one stock, that's a great place to start. And then it has to fit some sort of story that you can understand, and a story that has legs. Not just, are they going to beat the numbers this quarter, but where is this company going over the next 2 years, 3 years, 5 years? Will it change the way we live? Do they have a competitive advantage? Who are the competitors? And those are the issues that I like to get into.
Yeah, I mean, I like to comment on management because if you think about the biggest companies, they probably have a big leader too that's leading their way.
Sure. And just as I think what makes Tesla unique is that it was the vision of one person, and that car has not been designed by committee. It's got a very specific viewpoint. You know, whenever you try to design a car by committee, a strategy by committee, you get bogged down. I find we govern ourselves by committee, right? That's democracy, which may be why sometimes it takes us longer than either of us, or probably many, would like to get to decisions and make things happen in Washington. But fortunately, on Wall Street and in corporate America, people matter, individuals matter, individuals can make a difference, and someone with vision and integrity is skin in the game is the person I want to see at the top of the company that I'm buying.
Definitely. Now let's go ahead, let's jump into a kind of a wrap up of the 2022 action in trading and investing.
Do we have to? It's been painful.
Yeah, that's why it's probably more of a wrap up, right? I mean, it's going to be great to be moving into next year, but what do you think of 22?
2022 has been the hardest investment time of my life, and speaking as someone who traded options through and stocks through 2008, the great financial crisis, the dot-com blow-up of 2000, some of the currency crises of the 90s. So, I've been around. I'm older than I look, Mitch. But 2022 has been very hard, in part because I've never seen sentiment so negative. And you can see that in the data, right? Consumer confidence at 50-year lows, positioning among institutional investors at 30-year lows. I mean, that's pretty dramatic stuff. And what's so ironic about it is that the two E's of earnings and employment have been so strong, all-time highs, right? So there's this cognitive dissonance between the action behind us here on Park Avenue South in the middle of New York City on a beautiful day where everything seems so vibrant, and then all these surveys and emotions of people in the market where it's so down. Yeah, I'll be very happy for 2022 to be in the rearview mirror, for inflation to come down, for the Fed to stop being on our backs, and for us to be able to get back to picking stocks and embracing growth.
Definitely. Now let's go ahead. Let's get into what a lot of investors are trying to go ahead and position themselves now, which is going into 2023. And a lot of that is going to be focused on themes and areas to focus for investments. What are some of those themes that you're looking forward to in 23?
Well, again, remember, I'm a growth investor. So while I appreciate the argument for value, you're not going to see me buy Bank America at 1.1 times book, because I think it's going to 1.5 times book. And that's a fine way to invest, and I get that. But no, for me, it's again about Bullseye Brief, American Ingenuity, the people and companies driving the world forward. So robotics, artificial intelligence, clean energy, the digitization of money, the digitization of physical assets, the move of everything online. I mean, every company is not only online, every company now is becoming an artificial intelligence company. So there's a lot you can sink your teeth into, and a lot I'm looking forward. And I think, Mitch, that as we find inflation coming down, supply chains have already begun to normalize, commodity prices have already dropped significantly. Now we just need wages to stabilize and the service sector to stabilize. As that happens, the Fed will have cover to stop raising rates, 75, 50 basis points, whatever it is on any given month. And as rates stabilize, we'll be able to rerun all of the discount cash flow models whereby we evaluate what future earnings are worth today. And that will give the investment community at large confidence to go in and buy stocks as opposed to sell stocks.
All right, now you mentioned robotics, you mentioned different themes there. Let's go into a little bit more of the micro. Let's go into any of the stocks that you like going into 23.
I mentioned artificial intelligence as one of the defining factors and engines of growth. If you're going to talk artificial intelligence, I think you have to start with NVIDIA, which is, it's amazing to think that was a single-digit stock not all that long ago. I didn't buy it there, but I do own it now. And it's down significantly from the highs. They've recently announced a next-gen architecture that's even faster than what already was the fastest chips in the world. Their current chips can calculate or make 3 trillion calculations per second. So as you're playing Grand Theft Auto, and right, you see your own reflection in the mirror as you walk by, and it changes with every step. That's because each pixel is being recalculated in real time. 3 trillion calculations per second, that's the current chip. The new chips are 10 times faster than that, 30 trillion calculations per second, and that's the kind of computing power that you need to drive artificial intelligence. It's why Facebook, you can love them or hate them, but it's why Facebook is using stacks of NVIDIA chips in their new supercomputer. So I think artificial intelligence is something we can all relate to. And that's a great place to start.
Yeah, definitely. With Moore's Law, it's just a kind of a given there that's an area that's going to continue to develop.
Yeah. And by the way, when you talk about NVIDIA, the valuation is half what it was several months ago. So it's something you can look at and say best in breed, and that, by the way, is another important theme for me. Best in breed companies, and are they down? And it's a rhetorical question, which I'll answer myself, and that is, you buy them, right? From NVIDIA being down to Salesforce being down, customer relationship management, Palo Alto Software for cybersecurity. These are big, chunky companies with cash flow, with high-quality managements that have been in place for a long time, with proven track records, and their valuations have been cut in half. These are the names I think that we need to focus on for 2023. They're the names that if you are a Tiger Fund Cub, or if you're a BlackRock, or if you're one of these other hedge funders that I know you talk to from time to time, and you're down a lot, 30, 40, 50%, and you need to make the money back, you go to best in breed and big, because those are the companies that you can buy, get a big position on, and I think you can talk about trying to make some money back first, and then actually making some money for your investors as we get into 2023, which I think will be a much better year than 2022.
Definitely. Now let's talk, of course, today there's going to be some Fed talk, but
Yep.
what we're really looking forward to is really where does the benchmark really go to, right? I mean, I think this
Yeah.
is what a lot of people are trying to decipher, because
Yes.
at some point, yes, we know that they will come back to cutting rates, but where do you feel the Fed fund ends at the end of the year? And also, what ends up happening going into 23? How do you feel the Fed's outlook will be?
Well, I can give you my opinion, Mitch, but actually the collective wisdom of the bond market is way smarter than I am.
Yeah.
So if you look at Fed funds futures, and there literally are futures based upon where you think Fed funds are going, just like their cattle futures, oil futures, gold futures, and the Fed funds futures market suggests that the Fed actually is going to be done early in 2023, and that they're only going to hike rates about another 2 percentage points. You say, oh my gosh, 2 percentage points. I can't handle that. Well, remember, the markets move before the facts. And the 10-year, the 2-year have already moved dramatically and have discounted some of that move. So I think we are closer to the end of the Fed rate hike cycle than the beginning. In fact, I think we're past halfway. And again, that's not me speaking, that's the collective wisdom of the bond market. So if you think that the Fed fund futures market has it right, and that the Fed is done by, let's say, February, stocks are going to move before that. Because stocks generally move 4 to 6 months before the actual event, which means we're setting the stage for some sort of move, rotation this fall. Will it necessarily be correlated with midterms? I don't know, but maybe. Might it already be starting to happen now? Maybe. But I think as you look forward, the way a Warren Buffett would look forward and think about the long term, I think you can make the case for some sort of pivot, because inflation will start to back off. It already has. That'll give the Fed cover, and that will enable investors to go out and buy. So it's a chain of events, and I think those wheels are already in motion.
Well, definitely right now is a time where investors have gone through we'll call a bear market, right? And
Yeah.
I think at this point in time, it's all about trying to give tips to investors that are new,
Sure.
right? Because the kind of investor that was around in maybe the financial crisis time has already seen what a down market could really come back to.
Sure.
The new investor that probably came in 2020 probably got their meme stock portfolio ripped to
Right.
shreds. Now, what are some of those tips to those investors that are really trying to establish their retirement looking forward?
Yeah, and I like the way you just framed that question, because I think it speaks to mentorship and sharing. And I think the only reason I've gotten to where I am in my career is because so many people have looked out for me along the way. So in terms of sharing what I have learned, read more, trade less. Think more like Warren Buffett and less like, God bless him, Jim Cramer. A very smart, successful guy, but I don't want to trade in and out. That's not what I do. I'm trying to help my subscribers identify the high quality companies that not only have staying power, but are changing the way we move, because those are the ones that are growing, that generate upside, not only for customers, but ultimately for investors like us. And at the end of the day, we're trying to build wealth, both for ourselves and for our families. So focus on quality, trade less, do the work. I feel like in the past year, everyone's become a chartist and a macro expert. And while I look at charts myself, and while I have an opinion about the macro, the economy, employment, etc., my secret weapon is looking at the transcripts from company earnings reports and from CEO presentations. And what I really like to do is go to the Q&A part. When you get the analysts on Wall Street, when you get the 14 analysts
Exactly.
who cover a given stock on a phone call with the CEO, those 14 analysts know way more than I will ever know about this company. And the questions that they ask are the ones that, if I knew as much as they do, and I might know as much as some of them, but collectively they're going to know more than you or I or any single individual. Yeah, if I focus on those questions and then specifically the CEO or the CFO's answer, that's where I get the nuggets that ultimately help me make an educated decision.
Great tip there. Definitely paying attention to the analysts, and I agree with you. I mean, that's their job, right? Usually they only got a couple of stocks that they deep dive into.
I mean, they live and breathe these companies, you know, and you got to respect that and take advantage of their knowledge. And the fact that we actually have access, typically on a company's investor relations website, to those transcripts, what a gift. I mean, that's amazing.
Definitely. Now, the last thing I'll leave off, if you mentioned Warren Buffett, maybe it's a quote from him, but what's a quote that has stuck with you in finance that you kind of refer to back, and is a really good quote to kind of continue moving forward in your investment career?
Well, my mentor of many years, wonderful investor, who's very private, so I won't mention his name, but has been enormously successful, was a public CEO for a long time, likes to ask himself, and when I worked for him for 13 years, he would ask the same of me, a couple of questions every quarter. What am I doing that I should do more of? What am I doing that I should do less of? Where are the biggest opportunities, and how exposed am I to them? I think those are three great questions that if we can ask ourselves on a quarterly basis, what am I doing that I should do more of? What am I doing that I should do less of? And what are the biggest opportunities, and are we exposed to them? I think that's a good introspective, thoughtful, macro and micro way to move forward.
I love it. It's kind of like it's your own SWOT analysis, right?
Yeah.
Your strengths, your weaknesses, opportunities, and the targets you're looking for. So I like the approach there. So the last thing I want to leave off with is, of course, where you guys can learn more about all the work that Adam Johnson does for Bullseye Briefs. Oh,
thanks, Mitch. Well, it's a lot of work, and I love what I do. Bullseyebrief.com is my investment letter. I publish every week. It's a new stock pick every Sunday, as well as news on the names, catalysts on the names, and what I may or may not be buying or selling on a given week. So bullseyebrief.com. I have a 45-day trial for $45, $1 a day, and then annual subscriptions and quarterly subscriptions as well. So bullseyebrief.com. And by the way, I always put my phone number on all my emails to people, because I think that it's important that if people have questions, if you have questions, you should be able to get in touch with me. Mitch and I are talking today, but I want to be able to talk with you too.
Excellent. Like I always say, it's not about the answer, it's about the questions. So definitely reach on out if you have that question for Adam, and I think that's really about it. It's not about asking the answers, it's about knowing what questions to ask so that you can go ahead and make your investment decisions.
And figuring it out together.
Yeah, definitely. That's what we're here for. Thank you for joining me today, Adam
Mitch,
Johnson, here in New York City Central Park. You know, one of the things is I've always watched Adam go through this park, and I think it's definitely a great opportunity to bring this to you guys, the Benzinga Nation.
Thanks, Mitch.
Thank you.